Yo, yo, yo. Mic check, mic check. 1 2 1 2. I think we should be good. What's up? How y'all feeling? Y'all feeling good? Today is let me check the date. Today we got February 12th, 2024. And it's pretty good. Hold on, let me see. I think we got a some double mic situation going on. One sec. All right. I think we should be good. So, what is the deal? How are y'all feeling today? Once again, today is February 12th, 2024. And well, there's some excitement. There's been some positive volatility for crypto. So everybody is feeling a little juice, a little blood flowing here in crypto land, simply because Bitcoin is finally back at 50K. And it's been a minute, to be honest. Bitcoin hasn't been to 50K since about, I want to say December of 2021, if we were kind of keeping a time log on that. But a beautiful thing is that, like, we have these psychological levels that a lot of people start to pay attention to. So 50K being one of them. The next one's going to be 60, obviously, then 69K. And then there's price discovery. I think that what we all got to realize is that, Bitcoin has trekked so far up from the down draw. So it went from 69K down to 15K, and it's done all this work to march back up to 50K. So, with that being said, things are looking pretty bullish. Post chain ecosystem looking bullish. I was actually looking at a couple charts here. Stocks obviously still looking bullish, but a lot of these ETF inflows are really starting to make a difference. So, with that being said, we're in a good time, man. We're in a good part of the cycle where we basically, essentially, what I'll say is, like, we basically are in that asymmetrical risk opportunity to where when you're this close to having, typically you find a smoother type ride from here to the all-time highs versus trying to invest when we're already at overheated prices, or trying to invest in a declining bear market. That's very hard to do. So this window, basically 90 days before the halving and 90 days after the halving, is kind of like the sweet spot. Well, do you get the most returns? Well, no, you didn't buy when prices were at the basement floor discounted prices, but the ride is smoother. So if you're new to crypto, I know a lot of times, like, it may sound like people may be trying to get you to FOMO, like, oh, now's the time. But legitimately, from the data, not from how I feel, like, now is the time. If you're thinking about crypto for the first time, now would be a good entry point to start to DCA. But with that being said, yeah, man, we got a lot of great developments over the last few days. It's really been very nice to see. Like, I've been very impressed from what I've seen from the institutions, because people got to understand. I was saying this earlier today. You got to understand, where's the money coming from. Like, the retail folks that typically like to come into crypto, they're not quite here yet. Like, some of them are. I see some of that sentiment building up, but most retail people aren't here yet. So where is this influx of capital coming from? And it's always going to come from institutions first. And so, this is a nice positive thing that we're seeing, but we need follow through. We don't want to just see a good week or a good month. We want consistent inflows throughout the next, really 6 months, 8 months, to really start to kick this thing off. But as of right now, it looks like we're heading in that direction. And so there's a couple things that we can be excited about. Obviously, with us having 50K Bitcoin, like, hoorah. But the other thing, Ethereum is now, it's like, when I seen, and literally it's just like, because when you see these moments, you kind of like watch price almost all day. Like, almost like, that's how I felt to an extent, where I'm just like, all right, are we going to stick at 50, or is this just a wick? Or are we going to go past 50? And 'cause I want to see how would we maintain around that price. And believe it or not, all day, we've stuck here at 50, and we haven't just gone straight down. That is a really nice sign, to be honest. And so that shows me stability. That shows me that there's still demand. And as this halving comes into play, where the block reward gets cut in half for these miners. What you got to understand is if demand stays the same, then that's automatically going to push up price because supply that's going to be able to be sold on the open market gets reduced in half. And then so that is, believe it or not, that is a fundamental change that does help out the price of Bitcoin. And so we are in some pretty impressive times now. Like we're in that phase where Bitcoin is still going to be like that main narrative, the main thing that people are going to focus on that are maybe freshly coming into the market. But you already know, right? After Bitcoin comes Ethereum, then the layer ones, then the GameFi, then, I mean, we've even got some new narratives being able to like sell your NFT on the open market. Like this is things that we need to talk about. New narratives that are coming out that, hey, you may want to participate in, or you may say, hey, all right, cool, I'll chill back. I just know that overall crypto is going to benefit from the new narrative. But this is when we have like on the excitement level from like 1 to 10, 1 being like no excitement at all, 10 being like at euphoria. I'd still consider us to be at like a 5 or a 6. Like we're not at a 7, or definitely not at 8, 9, or 10. So that lets you know that, you're still in the fair value range, especially when it comes to price. And so one thing that I'm going to do and present on this stream here is talk about how to understand cyclical trends and how to use those trends to help you create your thesis in regards to investing. And your thesis is going to be important to you. Why? Because this is going to be the whole methodology under which you believe in why you should invest. Now, men lie, women lie, numbers don't, data doesn't. And the beautiful thing is when it comes to looking at like cyclical trends, so things that continue to go, but also secular trends. So secular trends are basically saying, hey, these are not just a trend for the week or the month or the year. Secular trends are like decades long, right? And so what I want to show you guys today is how to recognize the secular trend that we're in and compare it to other secular trends that we've had. But to do that, we've got to get time on our side. So we've got to look at a whole lot of data. So Bitcoin has a nice set of data, about 14, 15 years. But guess what? The stock market, we may need to leverage the secular trends in the stock market because we know the correlation is there, y'all. And say, what do those secular trends look like over 5, 10, 20 years? And how can that correlate to Bitcoin and the rest of crypto in today's time? So we'll look at a couple things. The commodity channel index is a way to look at secular trends for stocks. I'm going to show you guys how to do that today. But then also I want to teach or express how to assess where you're at within a market. So just like within a year, there's many different seasons. So typically there's 4. So you're going to have winter. After winter, you're going to go ahead and have a springtime. Then you have that period of time where it's summer, autumn, all that good stuff, autumn or fall, whatever one you want to call it. So crypto has those same type of seasons. Obviously the winter is going to be that period of time when prices are going down. That's the bear market. That's when nobody wants to do with anything within crypto. Now it comes to the springtime where it's not going crazy yet, where things are getting, okay, a nice, little calm type weather. So it's a little bit calmer, but not going down. So that looks like the accumulation range. We're past that. Then you got that summertime, and that's when things start to get a little bit more excited. Prices start to kick up a little bit, and summertime lasts for a little bit. It gets hot out here. And then that autumn, that's that maturing of the year, right? That maturing of the asset, for example. And autumn is typically when you're going to find your all-time highs within crypto. So we'll look at how to, look at that on a chart and understand why each phase is labeled what it is. And I can tell you right now, we're in the first third of the summer time in crypto terms. So we got 2/3 of summer left to go, and we got all the autumn left to go. So that means a lot of money to be made, and I'm here for it all, really, really. So hey, appreciate you guys for coming through. Like it, definitely got to subscribe if you haven't, and we're gonna start to get into some of this information. We're gonna look at we'll look at CoinGecko first and kind of see. What do the prices look like? Like things are looking pretty spicy. So let's trek over to CoinGecko and we'll take a look for a second. So let's do it. And after I do this, I'll hop into some comments here. So we got CoinGecko up, and let's see, what can we see off of CoinGecko? All right. Hold on, I'm checking the chat. We got a couple good. Okay. Yeah, I see a couple things in the chat that we'll take a look at here in a bit. Or we can do it now, actually. Let's see here. Who we got in the chat? Yes, sir. What up? What up, Dan T in the house? What else we got? Yes, we in here. We ready. Bags are packed. Yeah, the bags are definitely packed. But here's the beautiful thing. You can still kind of pack your last little tidbits in the bag. Let's say you're going camping. You got to make sure you got your tent, you got your non-perishables, you got your knife, you got all your kit. But go ahead and throw a couple little extra things in there just in case, right? That bear spray, whatever. That's kind of where we're at, right? Where we can go ahead, pack the bag a little more, or if you're just starting, you need to be hurrying because let's say you're just starting to accumulate or you're just starting to get in crypto. Like now is like where you gotta be like, okay, let me pack my bag a little bit more swiftly because one thing I'm gonna present to you guys is how important time is. Time is a better barometer for some things than price. And what I mean by that is saying that, you get a better evaluation like with the seasons of things and seasonality. And that's based off of time, not compared to like, all right, well, the price is supposed to be this in whatever time period. Like you're not only looking at price, but let time help you with your assessment. So, with that being said, we got a lot of things going. Yes, sir. Let's go, baby. 50K BTC. And we've dipped down below for a little bit. And that's kind of what I've been wanting to see all day. How long can we sustain that 50K? Is it like a true, like, okay, we're up here or are we just wicking up here? Bring it. You already know. So you already know, like, when we get into the stream, it's going to be like in depth. Like, I don't do anything halfway. So who else we got? The victory is mine. I don't know. You're going to have to share that with me, man, because I'm feeling pretty victorious today, especially after DCAing for the past, it seems like a year and a half, 2 years almost. So Sui, yes, we will talk about Sui Chain here. Yeah, definitely. I can touch on that here in a bit. What else we got? So Joe says, I want more dip. I'm playing a swing and, really need low 40s again. Is it coming? Low 40s. Well, there's a couple things that we need to look at. Maybe we need to look at some methodology to answer that question. So maybe we look at the short-term holder cost basis. That may be a good barometer to say, hey, how low can we go? Or like what kind of a dip can we get? Low 40s, that could be a potential, but it's not a guarantee. And in the Volta Crypto, this is something that I have been explaining especially over like the past 2 weeks or so, where it's just like, we're not guaranteed to get a 30 or 40% capitulation. Yes, that might happen with COVID, but in this part of the cycle, yeah, we're going to have some down draws, but not all of them are going to be like those generational type, like, oh, here, like so recognizable. So if we do get a 15 or 20% pullback, appreciate it. So, from the math, not 20% pullback from here, that may be like 42K, 43K. But we just had a pullback not too long ago from 49K. And we're already starting to make a new high. Well, we already did today. So, we'll see. That's kind of how it works. I had been saying it in several streams, like where sometimes we try to wait for this exact pullback. And I'm not saying this is you, but sometimes we try to wait for this exact number versus saying, okay, what does the time look like? And what we're finding out is if you try to wait for an exact number to be hit, and then just prices just go higher, and then you might get like a 15, 20% down draw. But then still at that level, it would be higher than if you would have just did your dollar cost average or your purchase at that point in time. So I think sometimes we need, in this part of the cycle, we need a little bit less like analysis by paralysis and just more action, because no one's ever going to get it perfect. The whole point of accumulating crypto is the first word, accumulating it. You can't accumulate it if we just watch on the sidelines waiting for the perfect time. And I'm not, like I said, I'm not saying this is you. The probability of us hitting the low 40s again, it's dwindling down. The longer that so the way that this is going to work, the longer that we stay around the 50s or in the 50s, the less of a chance that we'll be coming down to the low 40s. That's just the way this thing works, So we'll see. Let's see. Yeah, so maybe after the Genesis liquidation. So they have 1.6 billion to sell. But let me hit you guys with something in regards to that. Just about, and we got to check for the inflows for today, but net inflows are like 400, $500 million a day just off the ETFs. So to soak up that $1.6 billion dump, you're talking about 3 days of just the normal, experience of what we've been dealing with just due to the ETF inflow. So it's a little bit more of a nothing burger. I know 1.6 billion sounds like a lot from Genesis, but in the grand scheme of things, it's really not. Like there's billions of dollars just in the past, 20 something days, whatever. There's already $7 billion of just new net inflows off the ETFs. So, that's something to think about as we compare and contrast on what happens to price. If the demand is there, we may not get a serious dump. Let's see what else we got. Get in the vaults of crypto and change your life. Hey, he's saying it. He's got firsthand experience. We've done several consultations, and I know he's sitting pretty off of the things that we've talked about over the past. I mean, I want to say our first consultation was a long time ago, 6-7 months ago. What else we got? Bull market should feed into next year. Oh, of course. Next year is when we get to crypto autumn, so that is 100% correct. Let's see. Who else we got? Let's see. We got Ted Cash. Appreciate that. Yes, we got the alpha. It's on the way. Yeah, like for real, like hashtag bear spray. That's technically what we're doing here. Like we're going on this bull run. We need the bear spray. That's what we got to do. Let's see. My bags are packed, but I have a bit of anxiety. So anxiety and fear. Now they're two different things. Fear is the concept of saying, hey, I am worried because I maybe experienced something before and this actually scares me. Anxiety is maybe the fear of something that has not happened yet. So if you're anticipating something bad to happen, it's something, the way that I've dealt with anxiety is saying, okay, let me temper my expectation, right? If you don't try to get things perfect. So I remember when I was playing ball in the league, I remember when I was young in my career, some of that anxiety would kick up before a game. But what I realized as I got older and I got more seniored into the league was like, it's just an aspect of saying, hey, the approach needs to be what it needs to be. You need to be professional, need to work hard, got to go and handle business. It's game time. But once you put in all that work beforehand, so you felt confident in, that week's work of practice, your film study, and all that kind of stuff. Once the game comes, you just let it fly. You just let it be. And after the game, you just know you left it all out on the field. So investing is kind of like the same way. Once you put in that work, you're doing the research, you're catching the streams. That confidence should come to where it's like, hey, I've done what I need to do. I'm gonna take this action. Now, regardless of whatever happens after that, I know that I did everything I could, and that's all anybody could ask of anything. So that may be a good way for you to, handle a little bit of the anxiety. But the biggest thing is understand that really, I'm gonna be honest with you. Like, this is your first bull run. Let me tell you this: you've already won, simply because you're here and you've taken some action. You're not buying a top. Like a lot of people come in only wanting to participate in the top. So the fact that you're watching the stream today, the fact that you've participated, and I don't know your situation, but even at these prices here, you are ahead of the game. So, go ahead and relax, my friend. Things are going to be okay. We just got to keep on rocking. So with that being said, I think we got through all the comments. All right, let's get to it now. So we have CoinGecko here. This is the preferred go-to site. I really don't do CoinMarketCap anymore. CoinGecko is going to be able to sell some basic information. So as of right now, we got $1.9 trillion in market cap for all of crypto. That's pretty good. So the all-time high in 2021, in November, we got up to $3 trillion. So we're 2/3 of the way there in all total market cap. Not bad. And as we go ahead and look at some stuff here, like we got some volume now. Like here's all of crypto, $87 billion of volume. So that's why I say when Genesis is only going to dump 1.6, just look at all of crypto. And Bitcoin is a lot of this. $1.6 billion in sell pressure ain't too much. I think we can handle that over a week's time span or even 2 weeks, and that'll be, soaked up by the demand. So what do we have trending? Gala. Yeah, it's been a while since we talked about Gala, but Gala is still creating. They're building. They have a usable product. I played many of their games. So Gala on a very nice accumulation range for Gala, y'all. Like, if y'all sleeping on GameFi, Gala is one of the ones that you definitely want to take a look at. But we'll come to Bitcoin. So in the past 30 days, Bitcoin is up 16%. That's pretty good. Past 7 days, 17%. Ethereum just right there close by, past 7 days up 15%. But as you can see on the daily, the 24-hour basis, Ethereum is kind of kicking up. And so we got 6.3% gain for Ethereum versus currently, for Bitcoin instead of 4%. So that's not bad. But yeah, winners are going to win. Like the thing about Solana, it's really hanging on the heels of BNB. Like, basically, once we start seeing Solana like the 140, 150 range, it's going to outpace enough to be number 3. Like, Solana is going to be ahead of the Binance chain coin. And I really believe, like, from what we've been able to see, the development from how they've been able to capture so much attention, even though they have faults, right? Even though the chain is not up all the time, price does not always react to what happens on chain. But Solana is going to be able to carve itself out as number 3 as a household name. And so, think about, hey, when you had a chance to grab that Ethereum for $100, did you? Some of us did, some of us didn't. So Solana, now the market cap, is different. And with that being said, supply may be different, but you may be kicking yourself right now if you didn't have the number 3 coin in your portfolio. Maybe it's a 5% allocation. Who knows? Whatever. But, big network effect happening here, y'all. What else we got? We got AVAX, so AVAX is having, a nice week, 19% gain. Now, the one that has been leading. So one thing that I've been able to notice and try to keep track of are what are the coins that tend to lead the market. And so this cycle, Chainlink is that coin. Chainlink is up 40% in the last 30 days. And this is like a top 20 coin here. And so $20 for Chainlink, not bad. The Oracle's, the Oracle system that they have provided for many chains is very key. Let's see anything else that's kind of popping out. Let's see what's coming out on the last 24 hours on the upside. Let's take a look. So Beam is looking pretty good. And once again, pay attention to these first cycle coins. So coins that I've talked about on this channel. Beam is one of them. Say, Celestia, right? Those are 3. And as we kind of see, even Celestia up 11% for the day, up 23%. I'm sorry, Say up 23% for the week. Not half bad. As we click into Say, the circulating supply where we only have a quarter of the supply out. But obviously with the young coin, it's going to have a lot of inflation. But if demand meets that inflation, you're good to go. Let's see. Now, what does this look like on log scale? Let's see what we're looking at. So log scale. Let's see the whole chart. What we got? And so in the Vault of Crypto, you could use the Hatter, right? So the Heikin-Ashi churn reversal and get all the local lows and all the pivot points on any coin, right? So, we may have to throw this coin and see kind of where that's at. So, but yeah, it's on a steady trajectory. And this is like, for a coin in its first cycle, this is a nice accumulation range of just going sideways from January 5th. So for about a month and some change before it tries to make its next move. And so, at 74 cents, hey, 74 cents. Ask yourself, man, could I have gotten that Say at 74 cents, or are you going to wait for $7? The choice is yours. Now, if we want to compare this to Bitcoin, what does this look like? And same thing, it is even outpacing Bitcoin, especially since October. So this chart is up and to the right versus Bitcoin. So that's a positive sign. And if it is outpacing Bitcoin, then it's also outpacing Ethereum. So check. Outpacing the dollar, outpacing Bitcoin and Ethereum currently. These are all good developments that you want to see. So continue to do what it's been doing for the past, 3 months. So something to think about. All right. So we've seen some things that look pretty good, things that we talked about on the channel. Let's see. Questions. Thoughts on Fame? Yes, the protocol is great. Now, as far as the tokenomics for the coin, we may have to do a little discussion, but it's so interesting because Fame is like a direct carbon copy of another ecosystem token called Tethys on the Metis ecosystem that I had been using long time ago. I'm talking about everything from their dashboard to the analytics. It's literally an exact fork of Tethys as well, and GMX as well. But it is something to definitely add value for sure on the Pulse Chain ecosystem. So, but the tokenomics though, we got to talk a little bit about that. So let's jump into a little bit more. Where do I want to start? I think I'll start with the crypto seasons. So let's do that, and I'm gonna go ahead and pop off the screen for a little bit. So boom, I'm gone. Now let's take a look, and we'll bring this thing full circle here. We're gonna look at the total history of Bitcoin, and then from there we'll discuss the seasons. All right, so let's see here. Let me see if I can get the basics out of the way really quick. So we're looking at seasonality, so we'll get that off of there for now. But let's just talk about some of the aspects of, let's see here. Let me see if I can pull this up on the side. Yes. 4-year cycles. So let's start here, and we can get some understanding going here. So y'all should be able to see this. And Bitcoin, yeah, still at 49,928, right under 50K. We're close. All right. So 4-year cycles, something that everyone needs to understand. And what I've done here is I've laid it out as easy as possible. So every 4 years, we have a halving where basically you're going to have the reward for the miners be split in half. But what I've done here, essentially, I've taken low to low to low. So price low for each cycle, low, low. Estimate is just about 4 years. So that's very cyclical. And we can kind of see like the moon shape bubbles at the bottom to give us like a good idea. Like, okay, like the moon is coming up, moon is going down. So now every single time that we have an expansive phase within the 4 years, typically you're going to have a nice amount of time going up and then a year of going down. So you have, this sideways action, then you have this expansive action, then you have a sharp correction every single time. So after you have that parabola, then you're going to have a sharp correction. Some time past, that was 93%, 85%, 83%, and 78% this past cycle. And so these market bottoms are ideal for starting your DCA or somewhere around there. In the Vaults of Crypto, we've been talking specifically on how to take profits as we trek higher. There's a methodology to do that based upon the halving cycle. And they have to do with a certain amount of weeks that tend to be cyclical as well. And so if you want more of that information, definitely hop in the Vault. But now that we have the basis, we can kind of get an idea of saying, all right, so we kind of see, what this is looking like. What does it look like for us to go another 4 years from bottom to bottom? So let's just do a easy date measurement from this low. And let's just go about 365. Let's say, 365 days times 4. So we need to go just about 1,400. Somewhere within that range. So just about 1,400 days. That's about 4 years, right? Give or take. And so that's when we are going to basically anticipate that next low, cycle low. So instead of December 2022, we take that out 4 years, and we should be looking somewhere within November, December of 2026, right? So that's something to think about. Now, typically, you're going to find that you're going to have your peak about a year before that. So November, December of 2026, that means November, December of 2025. So somewhere here is where we could find our next peak. And as y'all can see, we're on the way. We have the trajectory, because if you want to just, make plain things plain, you can see the trajectory from low to high continues to be, pretty relevant and pretty, I would say, similar. The trajectory lowers every single time, but even if we go at a very low trajectory from low to high, so let's just take from low to high, as you can kind of see, it's like a fan. It's slowly leveling out. But even if we do a trajectory that is not as expansive, so let's say we find a trajectory that looks more like that, boom. So something like that, and that looks to be like what we're following. We're going to run right into this at this type of trajectory. And so how high up do we go? Do we go to 120 or 150 or 180? We'll find out. And so now that we can see the cyclical nature of the 4-year cycle, let's kind of talk about what does it look like to experience the different seasons within the 4-year cycle. So let's pull that up here. So we see those. Let's talk about seasonality. So in the same way that you have these down draws, so the winter time is, what we call it, crypto winter, where everybody's like, I hate this stuff. I hate it. Right? Let's talk about, okay, well, what do the other times look like? And so, like I was talking about before, you're going to have a winter, a spring, summer, and autumn. And so, after that crypto winter where things go down 85, 90% for some altcoins, 95% or 98%, after that winter time, we're going to have some sideways action. And I got a chat up here. Do you have osmosis? And the answer is yes, I do. Definitely a big fan of what osmosis provides for the Cosmos ecosystem, because there's a lot of opportunities to earn yield if you know how. And so definitely a good move on osmosis, in my opinion. So kind of getting back to the main topic, after you have that winter, you have a time period of where things are going sideways. And so this is going to be the least volatile time in the cycle. And this is spring. And then so, for example, you see the point here, springtime, and back there in 2015, you see the springtime back here in early 2019 and early 2020. And we had the springtime from December of 2022 all the way up until about like October. And this is the time where, if you were paying attention, or if you were, just saying, hey, I'm just going to DCA, we're just regardless, those were the best opportunities to do a lot of buying. And that's all of your altcoins. That's Bitcoin, that's Ethereum during the springtime, aka the accumulation range. And so now when things start to get very exciting is when you start to hit this expansive period where you have a considerable amount of just growth. So for example, the summertime, that's where you're going to have the bulk of the move. But the sentiment, like, you'll be surprised. Like, not all of retail is here during the summer. That's why I know that we're still in summer, we're not in autumn, because not all of retail is here. But this is when most of retail is going to miss the summer, truthfully, because we have a lot of expansive nature before we have that first like major like scary moment of like, oh snap, I think this thing might be over. Like, you could tell when summer is typically over, because you're going to have that moment of saying, hey, okay, we have gradual growth. So like we're looking at this cycle from 2016 and going into 2017, the summer was nice, right? Where you have a nice expansive period of, 13x. That's pretty good. But then from there, you have that scary moment of like, oh snap, right? Boom. Then things go down 40%. So that's like that first scare. But then retail comes back and they're like, this is like retail's first opportunity. Like, oh, okay, this is my investable low. And then this is when the rest of retail comes back to bring in the next 10x. But if you can hold through the summer into the autumn, what does that look like, for someone that participated in the summer? The numbers grow larger for you. Maybe it's now 20x or a 30x, depending on where you started. Maybe a 40x, maybe a 50x, a 60x. Imagine this is post-chain. Yeah. So, the people that operated or exchanged their dollars, their fiat in the springtime, those are the people that get the biggest gains. The people that get the next biggest gains are the people that participate in the summer. The people that get the least amount of gains are people that only participate in the autumn. And then so that autumn is, a time period of where you see the parabola really start to go more vertical. So this looks different than this. And it definitely looks different than the springtime going sideways. So same thing going to, this winter here and going into last cycle where we had the springtime. Now, this was a very, very interesting springtime because we got started off to a very fast start. But just like a wave, as it goes in fast, it came down fast. And then so as you can see, but nonetheless, this is still that accumulation range. And then you have that time period of where you're saying, okay, cool, the parabola comes. And this autumn period was a very muted autumn period simply just because what happened? You got to understand, well, China was like, yeah, you know what? We're really going to put a big old hole in this whole shindig going on here. And, we're going to try to get rid of all this mining here. That took a big dump, but then leverage was still kicking up and retail brought us back up to a newer high. So this doesn't happen if China doesn't change some regulatory framework. We potentially would have hit 100K last cycle, but we didn't. But that autumn was that second push coming back higher. So we've just experienced it. Like if you're still here through the cold winter where we went down, all of this stuff, Luna, FTX, Three Arrows Capital, Celsius, everything. And then you stuck around through this time period. Like this was the ETH low right here. So let's see if we can zoom in on that. Like this is Bitcoin, but ETH low was right here. Boom, that candle there. Bought some $900 Ethereum and quite a bit of it. Thank you very much. And then we go sideways. But then that springtime of like, okay, we have the reset. We have some, a little bit more positive sentiment. And then boom, summer has happened. Now you may ask yourself, well, why is that summer? Why wasn't summer like very early on? Simply because of this. Summer is reflected when you not only see Bitcoin get an expansive move, but all of crypto. So this is the time in mid-October when all the alts really came alive. Not just some of them, not just Solana, not just Caspa, whatever you call it. Not just Injective, but like all of the alts came alive here. That's how you know we're in summer. And, and we're printing a nice, very, very nice green candle. And we just obliterated this last wick. The credence of going up more than down is looking to be the case here, y'all. And so summer is abreast. Now, how long will we be in summer? For quite some time, y'all. Like you really know when we're in autumn, just simply when your mom's cousin's little brother's second friend is asking you, how do you download Coinbase, whatever the case is. Like, and we're not there yet. So summer is exciting, but it's not the crazy time. But this is where you want to be. So like I said, we're in the first third of the summer season within crypto. So, I'll make this chart available to everyone in the Vaults of Crypto. If you want to understand where you're at, watch the streams, or if you want personal access to it, definitely jump in and you'll get access to this. But yeah, we've been through a lot, yo, like 100%. Like, I think the crazy thing is we have this season, right? Celsius, FTX, Luna. We just don't know who they are until they blow up. And that's the thing. Like, they're always going to cover it up. They're going to cover up all the problems until they're forced to show their hand. And that shit is what it is. But you don't have to worry about that if you're not a new investor at those higher price premiums, because during the autumn, that's when things will start to blow up after a long, expansive time of leverage and, easy monetary policy and all this kind of stuff. But, you're going to be the cohort of people saying, hey, I know the cycle, and I understand the time periods. I know the seasons. In the autumn, you should be thinking about taking profits, right? And then after autumn, that's when things are going to go ahead and, blow up. They do every single time. Like Mount Gox situation. Mount Gox happens here. Blows everything up. So, understanding the seasons is very important. So we've gone through a crypto winter. So it went from 69K to 15K. Crypto winter. The spring was that revitalization of price starting to make a nice uptrend, brought us back up to about 30K. We had our last little dip and we sprung up into summer. Now we're at 50K. Typically, summer is going to take you to all-time highs, and then autumn is going to be price discovery. And as we already talked about, due to the 4-year cycle, and like I said, it's not going to be perfect, but within the range of October, November, December 2025, that's going to be like that very, very exciting part of the cycle where we are in crypto autumn and price discovery going to who knows where, if we want to do like an easy price target or a little explanation of, what can happen due to looking at the Fibonacci retracement or expansion. So let's take a look and see, hey, what is just a general base case where these fib levels get hit more often than not. So, just being very conservative to the 1.6, that has us here just about 100K. So we're halfway there since we're at 50K. So just a double from here gets you to 100K. Now, we got to ask ourselves, well, what happened with the last cycle, And things aren't always going to be the same. We have diminishing returns, but we take the top of this cycle to the low, drag that over, and you see we went nicely to the 3.6, right? And so let's say we're being more conservative. Maybe we just go to 2.6, in between the 1.6 and the 2.6. What does that leave us? And we've kind of got that 1.6 and 2.6. And this is saying, hey, we're being very conservative. Autumn may look like, Bitcoin getting in between 100K and 160. I'm good with that because now you got to start doing the moon math. Okay, if that's $160,000 for price, what does that do to the market cap? Okay, if the dominance stays, maybe around like 35 or 30%. Okay, what does that put Ethereum dominance? And if the Ethereum's dominance is that, then, what is the valuation of my altcoins going to be? So you can do your mental math by understanding, okay, where can we end up? What does that look like? And what does that mean for a lot of altcoins? That means a lot of X's, y'all. Like that means like 20, 30, 40, 50X for a lot of these coins that are going into their second cycle. And for the coins that are in their first cycle, who knows? Like we just got to let it ride out. So this is the exciting time of crypto. If you're paying attention, if you're here, but then you need strategy though. Like don't just go and just do anything. Having strategy, having a format, having some type of framework is always going to help guide you through your process. So a big thing to think about. So now I want to talk a little bit about cyclical trends here. And one thing that's very important when it comes to understand cyclical trends is most cyclical trends are attached to secular trends. And so let's check over to the SPX, and this is the S&P 500, and I'm going to kind of give y'all some alpha in regards to this here. So before we start, this is an incredible quote that I think we really got to visit and take a look at. And what it says is this. So far more money has been lost by investors in preparing for corrections or anticipating corrections than has been lost in the corrections themselves. So what does that mean? The opportunity cost. The people that are waiting for corrections and then there is a little correction, but not as deep as what they wanted, they lose out more than if you just bought, the price goes up and then there's a correction and then this price keeps going up. So what type of investor do you want to be? That's a choice that each one of us, we all have to make that decision. So y'all know that I love extracting data from large data sets. Now, Bitcoin is cool, but larger data sets potentially may be a little bit more advantageous for us. So what do we have here? We have a data set of, I'm talking, let's see if I can put myself back up. So I'm talking with the S&P 500, and we're going all the way back to, look at this, 1871. Like, this is a lot of information. So 1871. Now, are we going to use all that? No. I think the relevant time, and even if we look from the 30s or the Great Depression, like let's use that time period, we can see that two things are happening. Number one is this asset over the cyclical and secular trend. Cyclicality means, hey, we're going to get dips along the way. The secular trend is, but this is up and to the right. So let's not fixate on downdraw potential when we know the overarching theme is the currency debasement will push everything up. Your homes, the cost of a home, the food that you're eating, everything, gas, everything in price is going to be pushed up. So since we know that the secular trend is that, going back to this quote, if you because think about it, there's people that have been like, let's just kind of zoom in real quick. There's people that have been, I'm talking about since, and this is on a 3-month chart. So each one of these candles is 3 months. There has been people this whole rally that's been like, oh, yep, we're going to get that pullback. We're going to get that pullback. We're going to get that pullback. We're going to get and this thing ain't pulled back near nothing, like barely a little bit. But from October of 2022, this thing, for just the basis of the stock market, has almost gone up 50%, which is huge for the stock market under this duration of time. And so the biggest thing is this, same thing, everybody's looking for this great financial crisis moment. And we've done the exact opposite. So we see that, yes, we do have these time periods, but if you all remember the stat, let me put it up here one more time. From this data, 87%. So 87% of the time, stocks are going up. So people are literally, that's what I'm saying. It's just simple math. You're literally hedging for a 13% chance. That's the odds aren't in your favor to try to wait for a 13% chance, when the majority of the time, and why so many people got left behind over the past year, because they're listening to the news and they're not looking at the data. So 87% of the time, things are doing this, things are going up, as you can see. 87% of the time. And this ain't nothing that's just been happening for the last year or two. This has been happening for almost dang near, a century, So this is the secular trend. Now let's look a little bit more detail in what I have here. Okay. So what I've been able to kind of code up for us, and I've taken this because they didn't have it here on TradingView, but I took the same parameters from other stuff to be able to put it on here. So the CCI. So basically, this is the commodity channel index. So what we can kind of use the CCI for is just secular trend momentum. And when you have your big deviations of secular trend, you'll see that show up on the CCI. Okay. And so the time period I really want to look at, and that way we can get a grasp for, hey, what is on the line here is this. So what we have here is we have some vertical lines here in yellow, a couple vertical lines here in orange, but I really want to kind of get our attention down to the bottom portion, where this CCI, this midline here at 50, and let's see if we can make that a little bit easier to see. So this midline at 50, this is kind of showing us that, like I said, majority of the time we are in a positive direction in price, right? And we have these long elongated periods of time. And then we have that little bit of a deviation, that 13%, where we break the secular trend for a moment in time. And then we go back for a long duration of the secular trend. And there's a couple areas that we like to defend, especially. So that area that we like to defend, and what we did in recent time, and so you're going to see how this stuff lines up pretty bang spot on. where we spend a lot of time. Let me see if we can make this bigger. We spend a lot of time getting past this 50, so past this midline, going into the bullish momentum trend for the secular. Like I'm talking about like years at a time, not just a cycle or a couple months, like years at a time for the stock market. And we stay there. But what do? But we bounce off this area of around 70 time after time after again, time after before we break trend. And this is like we're looking at a time period between like 1943 to 1969. Like we're talking 20 plus years. Then we break it. Then we're talking about another time where we break it, then we come up above 50, and then we bounce, somewhere around like that 70 time after time again. And then we break it again in 2001. So we're talking about from like the late 70s to 2001. Then we break it again for the great financial crisis. And then we go back above. We do that round trip back above 100. And then we're bouncing off 70, 70. And that's what we had this time again. Same thing that we did for these other secular trends for a long period of time, we did once again in October 2022. We did not break deviation and come down below 50. And those are the time periods of where it's like, oh, everybody's waiting for this. But they don't see that this happens extremely rare, and what happens more often time, and what a lot of people were proved wrong of is, hey, we hold, boom. And then we go back up into the hundreds and we stay back there. And like I said, this is not just for like a year or two. This happens for decades, y'all. So the secular trend is showing that things are looking pretty good. Now, what I am wanting to show you guys is, okay, so how far in this secular trend have we been? Like how far along in the secular trend have we kind of gone where we've gone past 50 and we've now gone up into the upper bound, testing 100 and having support at 70? And really, we're talking about since 2010. So people are like, oh yeah, but we've got to have that correction. It's been 8 years. It's been 10 years. Like, understand these things go for 20 years, 15 years. And then so let's take the two base cases of what we've had of the secular trends and do a little, analysis here. So the last time that we broke deviation and went below 50, it was 1942. Then we had a secular trend of being above 50 and just throttling back and forth between 70 and 100 for a very long time until we broke 50 again, all the way up until 1970. So we're talking about, essentially 28 years, y'all. And so during that time, we seen the stock market go up. And we're talking about the stock market, 10x. That's okay. But one thing that we need to do is say, okay, well, what does that look like, where we are here? So right here, this was 20 something years and we still had a long time before we broke the secular trend. Okay, so we have that one, 24 years, give or take. Let's take this one here. So we break the secular trend, a little touch there, and then we sustain it and we do that round trip back to 100. And so that starts again, 1978. And we use the support time after time after time after time after time after time, and then we break it here in 2001. So we're looking at from 1978 to 2001. So just about 22 years, 23 years, okay? Y'all seen a theme, 24 years, 23 years, give or take. And so we had a time period during that time, that secular trend of the stock market went up, we're talking 18x. So 1,700%. Not bad for 22 years. In crypto, we see that in a cycle, 4 years. And so what I wanted to do was say, okay, well, how far along are we now? And if we do the average of, 22 to 23 years, whatever the case is, what does that look like for the continuance of this secular trend since we've gotten the support here? And same thing, we're still going back up towards 100, right? And beyond. This thing can go up to, we've seen valuations to 150. And this is, like I said, this is a 3-month chart. So a quarterly chart. So this is saying, hey, this is projecting out for years before this thing could even really turn around and even have the opportunity to get back down to 50. Hint, hint, the secular trend is still intact. So how far along are we now? Basically, let's take a look. So we are in this trend just about, we're looking at Just about 14 years, y'all. So 14 years within this trend. Now, that may thus say, okay, comparative, we may have another 10 years before any pending secular trend being broken compared to the last two that we've had over the long duration. And so here's the caveat. Now I'm looking like right at it, like I'm looking like right at it right here. So right here is where we find ourselves. So that time period of where we are currently is where I have these orange vertical lines here, the last two secular trends. So what does the stock market do with the remaining part of the secular trend over that next decade? And we continue to see the stock market just, there's these little down draws. Like, those are little down draws. And okay, cool. Let's zoom in and talk about the down draws that happen along the way of the secular trend. And this is why always looking at the long term is very important. Because 100% of the time from these base cases, we've ended up with higher prices a decade later. But okay, cool. We find that, you may have that 30% down draw, that 26% down draw. Boo-hoo. Oh, man. But that's nothing in comparison of the extra 200% that you got if you just held for the remainder of the secular trend. So what I'm trying to say here is, what does that look like? Average between 200% gain there over another decade, another 268% there. Let's just call it an even 230% average. Right? And we're taking long periods of data here, y'all. Not just a couple, 4 or 5 years or even 15 years. We're taking, 20 years at a time. And this is going to be honestly more accurate than any other stuff that y'all can look at. Anything on like a weekly chart or a monthly chart. If you're only looking at like only a subset of just a couple years versus looking at something that's decades long, like this is real stuff here, y'all. And then so even with the base case or the case of saying, hey, we'll go to the smallest extent of only maybe just doing around 200% gain from here, where does that leave the S&P 500 a decade from now? And let's just even push it to, let's call it, 2030, 2031. That leaves us with a nice price of, give or take, $15,000 for the S&P 500. Now, I know it's like, oh my gosh, $15,000, I can't imagine it. Well, guess what? Imagine it, because as long as the M2 is doing this, so M2 money supply, if you notice the trajectory is going to look very similar. So as long as they keep creating money, so US M2. Here's the caveat. As long as this chart continues to look like that, you notice the trajectory is the exact same. All the way back, same time period, right? Looking back since the 60s. As long as that's happening, guess what? We're going to keep getting to those higher valuations. So $15,000 for the S&P 500 is not that crazy. But then you must ask yourself, what does that do for this layer one that is in its second cycle? What does it do for this layer one that's in its first cycle? Pulse chain and PulseX and PHEX, all that stuff that's in its first cycle. What does it do for things that are in its second cycle that have, gotten the network adoption like Solana over the next 8, 6, 10 years, whatever it is that you want to call it? This is where the wealth transfer is going to happen, y'all. The secular trends. Stop worrying about just, the little drawbacks. Work hard and try to get as much money into this asset class that can give you the life-changing gains. And in case you forgot what the life-changing gains look like, let's just look at Bitcoin over a decade. So we'll go back 10 years from today. Or let's just say, so if first it gets to 2030, so that would be another 6 years. So let's just do that, right? 6 years. So that would land us in what? 2018? Bitcoin at that time period, let's go ahead and zoom in on this. In 2018 was a nice steal. That was during the bear market. So accumulating from there, and you just say, hey, I'm gonna just hold on. That's not bad. 13x. What happens if you hold for a decade, for 10 years? So let's go back to 2014, and that's when things get very exponential for the average Joe. For someone that maybe doesn't have 20 grand to put into a market or 100 grand to put into a market. Maybe all you got is just $100 a month. But if you do that for 10 years, 12 years, 15 years, right? So let's go back to 2014. Now things get real. 200 times your money. It's not bad. And it scales, down, based upon, the higher that you're buying, but still. This is what it takes, man. Longevity is the name of the game. If you're not thinking in these terms, you're going to lose. I'm going to be honest. You're going to lose because A, you're either going to probably sell your stuff way too soon. B, you're going to be buying stuff at price valuations that you shouldn't, especially if you don't understand the seasons. But I pull all that to say is just like, at the end of the day, if you're just investing during a long period of time and you say, I'm willing to do this for 6, 8, 10 years, you'll win. That's just the gist. And the secular trend is showing us that we're on the way to very, very nice times. We got the election coming up this year. Typically, the stock market is ripping and roaring during an election year. So there's a lot of confluence here showing us that people that were saying that we're going to have, like, every time I used to hear this snippet here. All right, let's go back here. So every time I used to hear like the snippets of, okay, so Q4 of 2023, it looks like we're going to have that downturn recession. And, we got credit, deteriorating everywhere and the 10-year bond years and all the inversions. But yeah, it sounds good. But what is the secular trend though? Hey, even if we would have had a recession where, prices went down 40, 50%, we went down 30%. And that's very much in line with what happens in secular trends. And so do not let talking figureheads, don't let people here, even on YouTube, like not even me, honestly, like learn to do the analysis for yourself. And the numbers are not going to lie. The price is not going to lie. The market is going to show you what's really going on. People that are betting to the long side, basically saying, hey, I'm optimistic about prices going up, they are always going to outperform people that want to wait for the perfect time. Because guess what? There's no perfect time. Like the biggest thing that, if people are like skeptical into getting into an asset class, it's because one, they probably haven't learned enough, or two, they've just built so much into, like, they've got so much fear and anxiety into them from the system that we currently live in, which has already been scamming them from the beginning. Like that's the biggest trick. Like you're not going to get scammed by coming in. Like, okay, there is some scams in crypto nonetheless, but there's scams everywhere. Like, but people don't even realize that they're living in a scam today by participating only in the fiat-based currency world. Like that's the biggest scam. And they're going to tax you basically on what you earn. They're going to tax you on what you earn from investments. They're going to tax you on what you buy. They're going to tax you on what you sell. They're going to tax you what you own. That's the scam from the beginning if you don't see it. So one, learn how to invest to outpace all of what they can take from you, right? And learn how to do taxes the right way. I'm very passionate about these things is because this is how you get towards that freedom that everybody wants. And it's not about just like, oh, I just want to be a baller and have all the money in the world. I know a lot of people just want to have the comfortability just knowing that you're okay. Like looking to the right, looking to the left, and like seeing us like, I don't have to stress about how I'm going to pay for this bill here. Or, hey, if I want to take my family out to a very nice vacation tomorrow, I can do that. And I can say, hey, you know what? Work, that can wait for later. This stuff, other stuff is more important. Like, so to get to that point, you got to do what it takes. And that means getting out of your fear, changing like the pessimistic mindset to saying, hey, let me go ahead and be a little bit more growth mindset. Let me go ahead and step into this, lean into this. And as I learn, let me participate. Because to be honest, for a lot of us, what do you really have to lose? Like if you're trying to protect your few $1,000s that you barely saved, and I'm not trying to say this in a bad way, but I'm just being honest, but that's the thing. Cause I was saying this not too long ago. Like you got to understand if you're in like your late 20s, 30s or 40s or 50s, especially 60s, you got to understand you've made tens of thousands, if not hundreds of thousands of dollars already. You've made hundreds of thousands of dollars, but that's a key word, made. And what happens? It all left. And a lot of people don't have nothing to show for it. And so it comes down to your decision saying, okay, well, what are my options? A lot of people just use the spin button. But let's piece off some of that into something that can give you an opportunity to, hey, if you like spending, okay, cool. At least you can spin out of something that's not only your own hard work or in a system that is only mainly just taken from you from your hard work. like learn the game, learn the way that the system works. And so that's why I come do these streams, every single week. So to make sure that we get that. So this is major stuff here, y'all. We got in the chat. So let's see here. Let's see. You banking on So question here. So I got a bag of SHA, hoping for 10 cents. Okay. You banking on Kusama. So I do have Kusama in the portfolio. It's really just sitting in my Fearless wallet, getting 15% yield. And I just let it sit. This is something that I bought last cycle, and I accumulated a little bit more in this bear market, but same thing. Polkadot ecosystem has not popped off yet. Yet is the key word, right? Let's see what else we got. Cool. Let me see. So let's head over. Let's head over back here. Boom. Okay. Here we got one. Appreciate that, bro. 100%. Hey, I'm here to not only enlighten, but to really get people to press that let's go button. Like I wish I had a button right here that said let's go, because a lot of people need to press that button and stop playing around. So yeah. Got to get serious if you want serious outcomes, like some serious gains. You got to get serious about learning. Like there's no other way around it, truthfully. Cool. So let's see what we could find on x.com. Let's see what kind of stuff they got. Let's go back here for a second. Michael Saylor, I believe, bought some more Bitcoin as well. These ETFs are, the inflows are there for real. Let's see if we can find them. I think the information won't post it tomorrow morning, but compared to if we're looking at last Friday, the ETFs, they pulled in net about $550 million. Yo, this is actually very, 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 very dope. I definitely gotta play this because I thought this was funny. I've seen this earlier. This is funny. Let's see if we can get some of this action going without getting a copyright strike. All right, let's see it.
Wake up, wake up, wake up, wake up, wake up, wake up.
The newbies.
And check this out.
Yeah, so that's how a lot of people are feeling, man. Like it's one of those things, like when you have been sticking through a whole bear market, it feels nice, man, to see a 5. It feels nice to see a 5 at the beginning of the number for BTC. It really does, because that just lets you know that the rest of the waves are coming. Like y'all see this right here. If you want to look at the bottom right hand corner, alt season is trending. It's gonna get even more hot than what it is currently. So Yeah, now this is pretty dope. What else we got? Ooh, let's go. So things like this, if this does not make you feel good about Ethereum, because here's the thing, Ethereum has a deflating supply. I've done. If y'all go in the notes, or if you go in the history within the channel, I've done full on streams about the merge and how basically that dynamic is going to same thing. I'm looking at 10 years out, y'all. Y'all don't understand the deflating supply, what that does. Also, post-sex. Y'all don't really understand what that does, especially when you have increased demand over the years with a debasing currency helping thrush and rush more capital into something that is becoming more scarce due to the network usage. Yes, this is a good development. So what does it say? $1.5 trillion asset manager Franklin Templeton files for a spot Ethereum ETF. It's a lot of money they managing, right? What happens if they put 0.5% into one of their portfolios, of their management funds? Like, what's that look like for Ethereum? That might be something positive. What else we got? Anything else? Let's see here. So Michael Saylor says MicroStrategy is now a Bitcoin development company. Okay, let's see what he has to say.
Makes sense for us to call our all in order to accumulate more Bitcoin for our shareholders and also to promote the growth of the Bitcoin network. Given the fact that the majority of enterprise value is now based upon those Bitcoin related activities, it makes sense for us to call ourselves a Bitcoin development company in the same way as you see a real estate development company or a petroleum development company, all in order to accumulate more Bitcoin for our.
I mean, look, the guy is not as crazy as what he can seem like sometimes. Like he's on the right side of history, He definitely is. So that's what's up. Let's see what else we got. So this cycle, I will start selling gradually as I start making profit. If I can make half of what I may get, I will be happy. Paid off house is what I want. Man, I have a lot to say about that because that is the beginning of winning the game, because the biggest expenses that most people have is going to be taxes, number one. And then that large pending debt, if they have a mortgage or student loans or vehicle loan. When y'all, it's like, I'll say this, it is the best feeling to have something that you're saying, hey, this is mine, and I don't have to worry about how this thing's going to get paid every single month. Because what that do, if you're, especially in your working years, that opens up the spread for you. So you don't have that major expense now. Now you just keep working. So now you got extra money that you can really start to enjoy, but even more to invest. So, I think, I'm a proponent because a lot of people are like, yo, but let me keep this low mortgage rate of 3.5%, depending on where you are, or 4%, and, borrow the money from the bank, but I'll keep my payment and I'll take the money that I made from crypto and leverage that. It's like, yeah, but you're still retaining that debt though. It's like one of the best feelings when you're just like, yo, I got a place where I can just lay my head and it's mine and I ain't got to worry about paying for this thing. It's a certain amount of comfortability that leans into lifestyle that is a beautiful thing, man. It really is. So I'm all up for that, man. If you can get that house paid off, like that's a big deal there. 100%. Like house paid off at the end of 25. I am always going to be an advocate because that's your home base, man. Like that's your home base. Take care of home. And so that's a big one right there for sure. What else we got? Let's see here. Yep, we already know. Broke 50K. All right, so Mr. Saylor, not half bad. Up 3.5 billion in unrealized profit. I think it sounds like he's going to be in this thing for the long haul too by the end of the decade, man. Like I would not be surprised. Like there might be some wild things, and especially if things get more exponential, I wouldn't be surprised if this guy getting close to like a 100 billion, man, from these gains. Like if Bitcoin makes it to like 500,000 or whatever it potentially could be by 2030 or 2034 or whatever, like this guy making 100 Bs, not M's, 100 Bs off of a decision that he started to do in 2020 and over a span of 14, like that cyclical trend, so like that 14 to 20 years, and all this extra money that's going to be printed until then. Don't be surprised if this is, he's going to probably have to realize some of this profit at some point. Like I mean, I don't know. I couldn't just sit on like $10 billion and not take nothing. Like, but who knows? He might see something bigger there, so. Now this happened. The Twitter founder, the guy who started this whole thing that we're on, he had a shirt on. And this shirt, I don't know if y'all can see that.
Wow. Think you got any talent in this building?
So he's representing. And the crazy part is,
He's
a lot of people didn't even recognize this. Like, a lot of people didn't even notice, like, oh, snap. Like, Satoshi? What is that? Like, they're looking at Jay-Z and, Beyonce's crazy wild hair, but
Beyonce
making an appearance. Okay. In the Super.
Wow. Think you got any talent in this building?
Believe it or not, that was actually a pretty decent game towards the end of the game. Like, I'm not gonna lie, that the first 3 quarters were kind of weak, but it ended up being a pretty good game. Yeah, getting close. About 66 days to the halving. Time is ticking, y'all. Time is ticking, and that's so crazy because we're at 48K previously, and now we've broken past 50K, and that was just earlier today. And I really gotta appreciate, like, yo, I really much listen. I really much appreciate this guy right here. This guy right here is the saving grace of crypto. Inverse Kramer is really a thing, y'all. Like 18 days ago, this guy was like, you know what? I don't think Bitcoin is going to find its footing. And literally since then, Bitcoin went from like 38K, 39K to 50K. Like, this guy is the biggest clown, man. But hey, he's a good indicator because just do the exact opposite. Like, it's really a thing. And he's been doing this for years, getting it wrong. It's like, how long can you embarrass yourself, or how long can you just be wrong purposely? Or I know he knows that he's constantly saying the wrong thing. But what happens is, why he's constantly wrong is because what he's trying to do, he's always trying to give short-term price predictions. That's a fool's errand. No one should be given short-term price positions. Or predictions. Like, if you find someone that's constantly doing that, or if you find yourself always thinking about short-term price predictions, then you're missing the main point. Like, that's something to really think about. You're missing the main point if you're thinking about, hey, where's Bitcoin going to be next month? You're not thinking long enough. Let's see. Anything else? Anything else of significance? No, for real. Like, dude is such a serious clown. I had to flip the hat for real, because oh man, that guy is just. I mean, he doesn't even really deserve this many words, to be honest. So here's the thing. Here's the development. I thought this was pretty interesting. This for a couple reasons. This interview with, what's his name? So Vladimir Putin and what's the other guy's name? Tucker Carlson. And the interesting thing about this is, in the West, there's a lot of talk of Putin being this crazy dictator and he's just out for blood and trying to take over the world. I could maybe see some of that sentiment, but from this interview, it doesn't look to be that serious. Like, he does not look to be what the West has characterized him in certain aspects. Yes, he's pretty intelligent, pretty smart. But believe it or not, man, the bad guy always wants to point the finger to someone else to make them look like the bad guy. Basically. Have y'all ever played the game like Clue or whatever like that, where you got to point out and figure out who the bad one is, and everybody's like pointing at each other? That's kind of what we find here, because he was saying a lot of things about the dollar that he was just honest. And like, I labeled it like, this is like the truth from the outside. Let me see if I might be able to find that specific clip, because I don't think this is it. But like, if y'all haven't, y'all can go find it somewhere. Like y'all can go and find it, on Twitter. But watch that specific clip where he talks about how United States, we're shooting ourselves in the foot trying to do a power play. But yeah, we have the reserve currency of a lot of transactions being done in dollars across the world. But where we are hurting ourselves is simply of the fact that we keep making more money, man. Like we keep making more of the dollar that we're trying to say is valuable. And that's what the problem is, more people are realizing this, and especially other, leaders of other countries. And that's like, hey, we can't even depend on them because they keep devaluating their dollar so much. So how are we even supposed to have some type of stability with this? So that's why you find a lot of these other countries are literally like racking up more and more into their gold reserves, because they're like, hey, like we may have to end up in a situation where it's like, yeah, no, we got to rely on this gold of being the real intrinsic value here. Because what the United States is doing, and even Jerome Powell in a 60 Minutes interview said, we are on an unsustainable path on the long trend timeline over the long term. And what does that mean? That means in the secular trend, yeah, these prices are going to keep going up, but it's just like you got to have the assets to really just benefit from it. For the average person that don't have the assets, it's going to be very, very rough, And so the leaders of these other nations, they understand this, right? So all these guys in BRICS, like they're trying to figure something else out, because it's like, yo, at this point, we ain't got it all figured out, but we thought that we could kind of trust in the United States. But one thing that foreign politics will teach you is that you can't trust anybody. And another reason why cryptocurrency was invented, because it takes away the layer of trust. And you can just rely on just code and value. That's all you need. And so, a lot of stuff, man. So, yeah, man, I think we'll leave it here. We'll definitely leave it here. What I'll do on the next stream, I guess I haven't done this in a minute. I'll probably end up doing a altcoin recommendation stream. So any altcoins that you guys want to talk about in particular, and not just looking at the price. Like, let's actually do the research on them. Let's actually dive into the ecosystem. I'll even maybe get a couple dummy wallets and test around and play with the networks. Like, because nobody in crypto does that. Like, that's one thing that, and yeah, I'll give it away for free. It is what it is. But like, nobody on YouTube really does that. It's like, all right, consistently, where they're saying, okay, what are some of these major, and they're not shilling anything, because I'm going to tell you all suggestions, right? I'm not just going to be like, hey, I want to tell you about this that I've been holding for 3 months already. Like, I'm going to take y'all suggestions. Whatever networks, whatever coins that y'all want to do a deep dive on, like a real deep dive. I'm talking about looking at the supplies, looking at the distributions, all that stuff for whoever has the coin, the founders, all that kind of stuff. Track records, viability, uptime, everything. I think we can probably do that in the next stream. And the thing is, that's what it takes. Like, if you're not willing to put in this time, you got to ask yourself, do I deserve the gains? That's the way I see it. Like, I don't feel good. Like, if I'm not putting in the work, I'm not going to feel good. I'm definitely not going to appreciate when the gains come. Like, I have to put in the work. That way I'll know it's like, okay, cool. Like, it's really time to cash in, because I know what things are supposed to be looking like. And because I've been doing the research. So everybody, like everything I just said, I'm hoping that all of you guys have that same feeling. And maybe you don't have it today, but you keep watching the streams, you keep participating, and maybe in a week or a month or 2 months, you'll have that same confidence. Because confidence, believe it or not, is a very important part of investing. It really is. So cool. So yeah, we'll leave it here. Hour and a half. Appreciate y'all. And unless y'all have any other questions, let's see. Any other questions? Let's get them in now. We're at hour 25. Let's see if we can get another 5 minutes of questions. Do y'all have anything? And I'll actually write them down. Do y'all have any coins? Here, let me grab this pen. Do you guys have any coins in particular or ecosystems that y'all want me to? Because I'll kind of do some prep work probably tonight and tomorrow. And by the time we hit like Friday or sometime on the weekend, when I do the next stream, we could really do a deep dive. So is there like 5 coins or ecosystems that y'all have in mind to do a deep dive on, and we can do that together? I have one, and I'm gonna reserve that for when we do it. But do y'all have anything? I got my notepad out, y'all. So pen and notepad. Anything. Here's the chance. What y'all got? What y'all got? Let me see. So LCX. I have not heard of that. So we'll look at that. LCX. All right. Anything else? Stacks. Now I have trekked over there to Stacks, so we'll look at Stacks as well. We got two. All right. I mean, and Jimmy is the one that's really trying to get in the research, right? Anybody else, or is this gonna be me and Jimmy trying to figure this out? Let's see. Blastar. Okay, so Blastar. First come, first serve. Blastar. What else we got? All right, Tetra. Okay, Tetra. Boom. Let's take one more, y'all. So one more. Nine inch. All right, there we go. Something from the post-chain ecosystem. I like it. So 9 inch. Cool. All right. So yeah, let's plan on that. So we'll reconvene here at the Vaults of Crypto, and once again, and let me just do this really quickly because I always get told that I need to be bringing this up more often in the stream. So let me do that. So if you need more assistance, if you need things to help you understand more TA, how to evaluate the on-chain, like the on-chain data really helps y'all. And I go through this stuff in the vaults literally every single week. If you need certain indicators that can really give you the confidence, like, okay, now is a good buy decision, and versus, all right, let me just wing it. If you want to be around people that are killing it, like I got a lot of reports this past week of people making a lot of money thus far, and we're just getting started. Definitely come over to the vaultsofcrypto.com, y'all. The link is in the description. Join. We're doing this thing, and you want to be on the right side of this. You want to be on sides. You don't want to be off sides, right? So definitely hop on in, click that join now button, and within 24 hours you get an email with the information on how to get linked up with the invite only scripts and the Telegram chat. So yeah, I appreciate y'all's time. This has been a delight to be able to go through these things, and I look forward to really catching you guys on the next one. So until then, I'll be catching y'all. Peace.